VCs have to do with backing up vision, real impact, scaling, purpose, and people. We're going to have together with us on stage, and we're going to see the discussion about the new VC Playbook for 2025, where everything is going to be discussed. In this discussion, I will have with me Hale Yildiz, angel investor from Lumia, which is going to moderate the discussion, Yusuf Ozdalga, partner at QED Investor and speaker, Rob Genieser, managing partner at ETF, Raluca Ragab, partner at Eurozeo, and Dilek Dinerly, co-founder at ScaleX and speaker. I would like to welcome everyone on stage, so let's give them a big round of applause.
Thank you.
Okay, I'll sit here. No.
It's good to start. We start. Hi, everyone. Super nice to be here in Greece again. Kalimera ya olus. And hope you take some insights from this panel where we will discuss how to lead rounds, how board meetings should go, what fundraising and VC looks like today. And also, I mean, we have a very good, distinguished set of experts in the panel, all from different stages of investment, different sectors, different geographies. So this is going to be exciting. I will open the discussion with first the introductions. I guess it's good for you to present yourselves, what you do, and to make it a little bit more founder-friendly, which I'm sure we are more founders and maybe students in the audience, what you invest in as well. Maybe, Rob, we can start with you.
Well, it's nice to be back on this stage. It's always a pleasure to be in Athens. I'm Rob Genieser. I'm one of the managing partners of the Environmental Technologies Fund. We're probably one of the oldest and largest sustainable investors in Europe. Hopefully that's going to resonate with the audience here. And I started my career in Silicon Valley many years ago. So when Lars is talking about Google, I get all excited about those crazy days. And I came to Europe in 2000 and have been investing here ever since. And the most important thing is I've invested in 3 companies in Greece. So for this audience, I actually put money where my mouth is.
Thank you.
Great, thank you. My name is Yusuf. I'm with QED Investors. We're a global early-stage fintech fund, so we invest only in fintech, but across the globe. I'm heading up our European investments, but we have US, LATAM, Africa and Middle East, as well as Asia. So we've done some companies like Nubank, Credit Karma, Klarna, Zopa, ClearScore, WageStream, many others. We have 4 billion AUM, and we're investing out of a growth and an early stage fund now, which is combined 1 billion. And we're looking to deploy that in Europe, and very excited about Greece and the sort of emerging ecosystem here. And again, fintech only, but very broadly defined, so some prop tech, some e-commerce as well.
I guess it's my turn. So, yes, us. My name is Dilek Dinerly. I am the founder of ScaleX Ventures. I call myself venturepreneur. I was crazy enough to build an early stage fund. I mainly focus on, I'm based out of Istanbul, and being here is amazing for me. But I mainly focus on Turkish Nexus, and we help deep tech, enterprise tech, software companies to go global. 90% of my companies are in US now. So, and we are doing it with 7+ unicorn founders support them.
Hi, great to meet you. My name is Raluca. I invest in growth stage companies, so that is companies a little bit in their adolescence and until they mature. I've had companies have multi-billion IPOs in New York, and I've had companies go to zero. So over the past 21, 22 years, I've been investing. I'm currently based out of London, and I'm your neighbor from Romania.
Thanks so much. And I am Hale Yıldız. I'm a venture partner at Defiance Capital. We invest in early stage enterprise AI. I also have my own company where I help founders invest in them as well to raise their institutional rounds and expand into the Middle East, where I'm partially based out of Dubai. So, first question. We're going to have 4 general questions, and then if we have time, we'll have more specific ones according to basically what you invest in. Before we get into the first question, now, in my company, we have this issue now that one of our deals that are going through, it's a cybersecurity startup. They've been in stealth mode for 8 years, and they've decided to now raise their Series A. And now we have 3 top-tier VCs fighting to lead the round, basically. And now the founder is in a predicament where he has to choose who to lead, who to co-lead. We have another one, again, in cybersecurity, where there's an aggressive lead investor coming in that wants to take over the entire round at the expense of pushing everybody else out, right, which is detrimental. Which begs the question, how should founders decide who leads their round? What should they look for when they're deciding? We can start from maybe Raluca?
Sure,
yeah.
Sure. I think it's, I think they should speak to other founders and get references in terms of how these founders behave in all the different periods of their life, because they're going to go through great times and they're going to go through tough times. And I think it's really important to know who you have at your table when things are going to get tough. Because in a fund round, every investor is going to put the best image of himself forward, but that's actually not what's reality when things become tough. So I think you need to know the volatility and the range of behavior of this investor when things are difficult. I think secondly, you need to bring to the table an investor that understands that they are not the operator and who knows their limit and how much they're going to micromanage versus how much they're just going to be an enabler of you as a founder. So rather than being prescriptive, opening up networks, making the right connections, bending over backwards when needed, but actually knowing his limits, because I think a lot of us in this business, unfortunately, don't necessarily always know our limitations and how much we don't know about running a business itself. I think for me, those would be 2 important things.
Thanks so much.
So the founders I'm backing I want to back up the founders who want to create the category leaders, let's say, and thinking from their perspective, they need to arrive a goal, let's say, and they need capital, network, like customers, talent. So the money is green, but can that investor bring those resources or network to you? That really matters, I think, especially for the next 18 to 36 months, which is the next milestone for your company. But also, I mean, I do lead rounds, I don't lead rounds. Usually when I lead, I need to have a high conviction, which means, are we aligned at the same vision? I think this is really important for the founder. Are you aligned on the vision with that investor? And can they bring you the credibility for the next rounds or the recruitments? So that I would really care as an entrepreneur.
Mm-hmm. Definitely.
Yeah, I mean, I think those are all great points. To add to those, I would say people or investors that have subject matter expertise is quite important. And when you think about subject matter expertise, it's great if you can have complementary investors. So we're fintech specialists. If you're doing something that touches fintech, maybe you only do fintech, or maybe you have e-commerce and you have a fintech vertical. Having QED would be great for you. We can help with fintech. But then also think about complementarity. You may want to have somebody who's very good at tech. So we always use Nubank as an example. When we first invested in Nubank, we did that along with Sequoia. We really helped with the Capital One diaspora, putting in credit talent. The person running Nubank today is ex-Capital One, for example. And then Sequoia really helped with the tech side, and we were really complementary. So that complementarity is important. What we also call playing the full 90 minutes is important. So a lot of investors disappear from the board if anything goes wrong. You want to make sure that they're there when you really need them. And I think that's just, you got to do references and see if people do that. And then depending on your funding needs, if you are building something that may become capital intensive, look to see if they have deep pockets. If you're going to need to raise 50 million after this round, and this fund is very well regarded, but they have no reserves, that's probably not a good setup. So you want to make sure they can follow you on your journey and manage it that way. And then finally, I would say personal rapport is often overlooked. This is a little bit like a long-term commitment, 10 years in many cases. So you want to make sure the chemistry and the trust and the character is compatible and it's something you can rely on.
It's totally a marriage, isn't it?
Yeah.
We marry the investors.
It is like marriage,
Yeah,
yes.
totally.
They used to say that your relationship with your founder will last longer than your first marriage.
Exactly. I was
But
going to say that.
That's a very dangerous thing to say because I've been married for 25 years. But the one thing I was going to point out is you just saw it in action for those of you that were here for the opening ceremony. Lars talking to the Canva founders. Yes, Lars, I think, was very helpful in finding the right CTO, the right co-founder, the technical level. But what he built up was a special relationship with those founders. Being a founder is a very lonely experience. Those two were lucky because there were two of them, okay? And when you go and find your VC, find somebody that you want to spend a lot of time with who's a very good sounding board for you. And you need that trust, you need that relationship, because without that, it is very hard.
Thanks a lot, indeed. And I mean, of course, choosing between who leads your round maybe is a good place to be as a founder, but it's not always the case, right? You usually talk to 100 VCs, maybe 4 or 5 of them come back to you, maybe 2 of them say, find the lead, because we're not going to do it, right? So the issue is finding that fund or investor who wants to price the round and structure it, and that's usually how founders find themselves, right? So maybe, again, over to you guys. When do you decide to lead a round, if you haven't already talked about it? And if you also want to say, what was the last round you led, which might have been exciting? So whoever wants to start.
Sure. Yeah, I mean, the last round we led was Swap Commerce in London. So that's e-commerce enablement, and they help e-commerce merchants with logistics, returns, and also things like taxes, customs, and now tariffs. When we invested, we didn't realize that tariffs were going to be such a politically charged word, but they, demystify and make it simpler for their merchants. So that's really benefited them. They've grown 7x in 1 year. So that happened to be a very important problem that they were solving. So that's been one that we led. And I think about leading in general, we have a preference for leading or co-leading because we tend to be pretty hands-on. Right. It's not a rule, so sometimes we can follow as well. But the way we operate is we only invest in things where we feel like we can help the founder. And if that's a mutual understanding and people appreciate that, then we do lead or co-lead. But I think there's different types. As I said, sometimes it's something quite capital intensive and you need somebody who has the capital and you want to get down and work and you don't want somebody in your hair all the time. We respect that. That typically then doesn't tend to be for us. And I think different funds have different approaches to that, especially in 21. During the peak, we saw a lot of funds just coming, writing checks and sort of disappearing. And if you use that capital well and if you have the resources, they'll still be happy to connect you and help you. That's also a totally acceptable answer.
Got it.
Yeah, I'll maybe take it. I mean, we'll lead every round that we can. Obviously, sometimes structurally you just can't, but ultimately I think what's really important is that you know that you're the trusted advisor #1 of the founder, because you can create that relationship as a lead board member, sure, but you can also have that relationship outside of it. You can be actually even just an observer, you can be outside of the board if you had to get in by a secondary and still be the first call. So what you really want is to be back to, it's a very lonely job. And for founders, most of the time they feel they have to have the right answers in front of the employees, in front of the board, in front of the customers, for sure. And you need to be that one person with whom they can be themselves, and they can actually be honest to their biggest fears and what they don't know, and be able to brainstorm with you in a safe space, because that's where the real answers will be found, not in all the other situations in which there's a facade to a certain degree of having the answers. So I think if you have the conviction that you have the relationship with the founder to be that first call when he really deeply thinks about something and is uncertain about something, then it kind of doesn't matter if you lead or you don't lead. But of course, you want to put the most capital of your LPs in the best conviction opportunities. So you tend to lead if you actually really like it and if you can.
Definitely.
And yeah, the last thing we led was, or that I did, the team did other deals, was in Germany, a conversational AI business that automates customer service. One sells globally, and that was the last round.
Nice.
I agree with everything that was just said. I would just add, leading is not a vanity sport. And what I mean by that is you shouldn't be proud of where you sit on league tables. What you should be really trying to figure out is what you were saying, how can you help somebody? And if I get involved, can I help that person? I think if you're asking the entrepreneur to be serious about his or her convictions, that they're taking that leap of faith, you as a venture capitalist have to take a leap of faith. You cannot wait for the herd to find the deal and join in. You must be leading. But when you get there, it's a team sport, right? You have to work hand in hand with the other co-investors. You have to work hand in hand with the entrepreneurs. And if you don't partner, you're never going to have success on a small company.
So I can give you a real example. I led a cybersecurity company because I had many experience in the space. It was coming out of Turkey, but moved them to US, bringing angel investors experience in the space. I was able to bring them and give them an access to a broader network. And we call them lighthouse customers, can introduce them to customers and help them to recruit. So I think all just following up on the answers, how we can add value. Do I have a high conviction in the market, founders, their model? Can we really create an impact for this company for the next phase of their company?
I think also sector experience really plays a role here, right? I mean, you really want to get into the operator VC style if you're really leading, especially something that's so deeply verticalized. Yeah, great. And so you lead the round closes, term sheets are signed, everything's fine. Now there's the operating table, which is the boardroom, right? Does anyone like board meetings? Okay. All right. It's not generally the case, right? We all, not many people like board meetings, right? They tend to be a little bit more droning on. There's slides, you go over the slides. There's no real strategy sessions, right? So is why I want to ask you, what makes a good board meeting? What should founders and investors do or not do, right? Depending on how you want to answer this question, during a board meeting to make them actually productive.
I can jump in. So my world is a bit different. We have board meetings, but I don't think they are board meetings because this is really early stage where they are trying to find product market fit. So usually real board meetings comes after for me, it's after $1 million revenue when they have early signals for product market fit. But for the good board meetings, the biggest learnings in my life, there should be a prep before the board meetings because you are bringing so many people and just going through the metrics during that time wastes a lot of time for the founders. There should be an objective for the meeting. It shouldn't be reporting to your board. They should come prepped and they should be able to help you on one or two strategic questions or struggles you have. So, and also the biggest learning that I have, and I heard many times from my other friends, if there's something that you need to share it before the board meeting and one-to-one. So make everybody on the same table before you go into that boardroom, let's say.
Definitely.
That's really important tactic that I learned after 10 plus years.
Especially if there's a crisis, it's better to maybe handle that a little bit before, right? So, yep.
Yeah, I mean, I think maybe just some anecdotes and scars and so on I'll share quickly. So one, I would say don't make your board too big. I think that's a very common mistake. Keep it as small as you possibly can, and you have to fight that. As Dilek said early on, those are very informal boards. Those are more fun. That's more like a working session. Later on, they become more structured, and I've heard some founders say later on that their objective is to get in and get out without any accidents, right? And that's a fair mentality in some cases. I think another don't do sort of thing is don't surprise your board. So I think another mistake I've seen is a board member gets asked a decision that they never were prepared for or it just takes them by surprise. That's not good practice. And obviously building relationships with the board is important. I think that goes without saying. Yeah, but there's a lot more, but I'll just leave it at that for now.
I was going to be negative on the question, and I've listened to the answers. I've decided I'm going to go positive on board meetings for a second. And the reason for that is very simple. Some management teams need structure, to be very clear. Some management teams do not focus on the date they're going to run out of money. Some management teams do not realize that they have problems. And if you don't actually have some sort of structured board meeting to address that and see that, I actually think some management teams can get in a lot of trouble. I also had a management team once tell me, thank God you're doing the board meetings, because that forces me to tell my team to get ready for the board meeting. You go sell something this week, right? Because I got to go report on how we're doing these guys. So I was going to be negative, now I decided to be positive. But I think the reason I was going to be negative is a lot of board meetings I go to, everybody's looking backwards, nobody's looking forwards, right? And everybody wants to talk about what happened as opposed to where we're going, what we're going to do about it. And I think a good board meeting is actually very important, now that I've reflected. But also, I think what was described earlier is conversations around the board meeting, one-on-one meetings on a regular basis, have to be part of the equation.
Yeah, maybe the other thing to just add, keep it short, keep it focused only on strategic issues, not on kind of a download of just tons of metrics, but actually also it's too many times unidirectional from the management team to the board, and maybe sometimes there's questions back and forth, but actually all these people on your board, you're not really using their collective intelligence if you don't ask them what they see in the tons of other boards that they sit on. I mean, this is the one thing. As investors, we sit at the intersection of all information, right? From companies, either the ones that are in our portfolio, deal flow, other VCs, etc. And I'm fascinated by founders who don't actually want to hear what we're seeing in so many of the other companies that we're analyzing. And they're not asking me, what are other enterprise software companies in the 20 to 40 million ARR, let's say, range doing this quarter? Are they making their numbers or not? Are you seeing the same trends? And, you know, have your investors come prepped to the board. You know, ask them an active question before. Come and tell me what you're seeing in the market. What are the things that I should be considering right now that you're seeing it's affecting others? Kind of think of them as your intelligence force that's kind of sitting in the outside world. And nobody does that, and that fascinates me. It's kind of a bit of a waste of the collective intelligence of all these people at the table.
Yeah, that's a really good point.
I actually want to add something on the Rob's comment. That was really good. For early stage, mainly, we do like bi-weekly check-in calls to help our founders, but then obviously board meetings are more like, what are we going to do? But what we realize, bi-weekly check calls are good, but for quarterly, like talking to your board or your team, what happened last 3 months or last quarter? What worked, what didn't work? Where do you want to go? And what is your struggle to go there? So just simplifying these things and like talking at the strategic level helps the founder a lot.
Yeah, definitely. I mean, other than being just retroactive or retrospective, better to be proactive as well. And I think also it's a big opportunity for founders to get insights from just investors who have seen a lot of it. And I think as a founder, you're so deeply in your product, in your sales, that sometimes it's really interesting to step out and see what the environment and ecosystem is doing, and where the metrics are lying. So thanks so much. And
one more thing to add, actually, we say often that we all say we're people businesses, but very few boards actually talk about their people. So it's good to have this very people focus. How are the people in the company doing? How is the customer? Some customer stories. That people focus is a good addition to have.
Greatest asset, right? Yeah. So last question, we can basically talk about a little bit more on the broader perspective of 2025. Q1 we closed of VC money around 111 or 113 billion dollars, I think, VC money was spent just this quarter, and unfortunately, 70% of that went to AI mega rounds, right? And one in particular, maybe everybody is aware of the OpenAI 40 billion round, which overshadowed the VC spending for this quarter. And if you control for that, early stage VC spending has actually declined. Right. So currently we're in a situation where the global world order seems a little bit volatile. There's tariffs, there's war, potentially another one. Public market pricing is a little bit discouraging, let's say. Apologies for that.
Saved by the bell.
I just woke up. So it's jet lag. I want to ask you, how do you see, what is the best advice you can give to founders when they're fundraising today? when rounds are so protracted and just things don't seem to be moving?
Yeah, I mean, so we used to also talk about how much, in terms of our pacing, and we'd go to our chief investment officer and say, you know, this quarter we spent 50 million, and he said, don't say spending, it's investing. So we said, sorry, we're not spending it, we're investing it. But yeah, no, I think our pacing has actually slowed down a little bit, and I think we see that in the market too. And I think that's healthy. In things overall, if you look at macro over 10 years, VC investing is still gone way up. So I think there is a very positive tailwind. Relatively, though, it's slowing a little bit. I think as a founder, the best advice is put your head down and know what you need, and then don't raise too much and try to be more scrappy and do more with less. Meaning, know, like if you're raising 1 million, what questions can you answer with that? And what questions can you not answer with that? And if it's product market fit, make sure you are able to answer that. And the most important thing for us is in any given round, make sure you're de-risking the business, which means answering a specific question, either positive or negatively. And the worst we see is, you know, somebody raises money, let's say 5 million, nothing changed, no new question was answered. They just spent more on marketing and grew their top line. But if no fundamental questions about the business were answered, that makes it harder for more thesis-driven investors like us.
Definitely.
Yeah, I think that talking about the environment of funding sometimes masks the real question, which is, should every company be funded? So, in fact, I think great companies get funded in any single environment, just like when people talk about the IPO window being open or not. It's not open for mediocre companies. It's fantastically open for fabulously performing companies. So I think if you're a founder and encountering difficulties, just ask yourself just a single question. What am I doing unique? What's my unique expertise, execution? The one thing I'm doing that is differentiated, just really laser focus on that and be able to express that with data points to investors. And if it's real, it's going to get capital. And if it's not real, then maybe work on something that's more differentiated.
I think we have to acknowledge there's been a tremendous shift in the market, right? So a few years ago, it was all about growth at any cost. Even if you had negative margins, who cares? There's going to be a future round coming. And to some extent, that was the Amazon playbook if you go way back. So it's not like that model doesn't work. But now at a time when capital is tight, you have to change your playbook. And the Canvas story I thought was interesting, and if I understood it, these folks actually were solving a problem that somebody was willing to pay for in those early days with their outsourced technology team, right? And so they started to get money through the door. It's the old-fashioned way. You got to go make some money today on your startup to get those next rounds of financing, and you got to keep that burn rate down.
Definitely keep the burn rate down. I think everybody's agree on that.
General advice.
But as an early stage perspective, I think the round sizes are increasing while the number of deals are decreasing, which means capital is becoming more picky at early stage. But we are also seeing really mega rounds at early stage too, like $100 million plus deals happened last quarter. Yeah. I mean, Mira Murati, which is a unique one, but other than that, we also see so many big rounds. What I would recommend, customers are going through a big change. I mean, AI is coming, they need to think differently. There's a tremendous potential out there. They have to focus on their customer and the real problem that they are solving and be resourceful at the end of the day. So that would what I do as a founder.
Find your product market fit. Don't do anything else, but find your product market fit. Yeah. Right? Yeah.
Yeah, I mean, I think it's also one thing we've seen in the US that's quite exciting, but also worrisome with AI, is that the cost of conducting experiments is gone way down. Yes. So, I mean, you can launch a company almost with one person and conduct experiments very quickly. And going back to what are you learning between each round, the cost of doing that has gone way down. So it's almost made it more competitive in some strange way. Mm-hmm. And we're still understanding and not fully knowing what the implications are for the VC ecosystem of that. So you have to be extremely nimble and watch, I think, what's happening in the US very closely, because I think it's, at least from our world, it's happening fastest in the US.
Yeah. Also, maybe I could add one more thing. Software is totally changing because of AI. It's all the database and the agents probably on the top for the logic, so everything is going to change. You have at least 30 competition in any category, even it's niche, which is crazy. I'm sure all the founders are feeling that.
It's crazy.
So it means how you are going to get the attention of the customer. It's becoming all attention economy. We are talking with our founders how you are going to be Kim Kardashian of your category. So that's becoming so critical, how you are creating your brand voice, how you are creating a presence, or how you are handshaking with your customers on the table matters a lot for the next era, probably.
Can I just add one thing? You made a very important point, which is make sure you know what's going on in the US. I would say make sure you know what's going on in Europe, hopefully going forward, because I'm hoping that's what's happening in Washington, D.C., is spurring governments, sovereign wealth funds like HDBI, people like that to support the ecosystem like never before. Because you have to grow more hometown champions in Europe. It's really important. And I hope people keep putting the capital in. I hope the entrepreneurs keep building the businesses here. I hope the industrial partners keep partnering with those companies, because this ecosystem really has to work in Europe, not just always looking back to what's happening in the US.
Definitely, and I hope those big rounds of AI mega deals, they get a little bit more, the liquidity flows a little bit more into various different jurisdictions in Europe, and we hope that there is less fragmentation in the future. Any concluding thoughts before we close? Because we're out of time.
Yeah, I think that AI, lowering the barriers to starting a company, to experimentation, to how many people you need, to development, to how much capital you need to, is actually equalizing the chances of Europe to a great degree. If you think about what's happening at the infrastructure layer and the kind of bloodbath there in terms of lowering the cost, that means that if you're actually building on top of that, you actually are to a certain degree removing the disadvantage of lower funding in Europe, because you actually have this kind of infrastructure layer that's available to everybody globally, and you can actually build your agent, you can build your orchestration layer and whatever on top of it equally out of Athens as you're building it out of New York, because you now don't need 50 million of initial funding just to get your R&D going, because you can build it with Cursor, who does this, that, and it's just you can get there in kind of much faster with much less funding. So I actually think it's a huge enabler for equalizing chances around the world for starting businesses.
Definitely, I agree. And maybe just 1 second each, tell me what you're most bullish on in the in the sectors that you invest in. Where's your sector going? 1, 2 words.
Yeah, so I mean, I'm heading up Europe for QED Investors, so I'm very excited, obviously, about everything we're seeing. I think some of our best investments have been in relatively smaller GDP countries. We have Wayflyer recently in Ireland, became a unicorn there. We had Payhawk in Bulgaria, became a unicorn there. So we're very big fans of whether it's the Baltics or the Balkans or elsewhere across Europe, smaller countries that punch way above their weight. And we think Greece is certainly one of those. And we're here for that in fintech. In fintech specifically, we're experts in lending, but we do everything. Quite excited about wealth tech at the moment. And I think that there's a big shift in terms of direct-to-consumer and the mass affluent, and becoming almost the sort of neobank for that segment by solving their wealth allocation needs. And as the volatility and inflation and everything goes up in the world, there's good solutions to be built. Yeah. So that's one area out of many.
So I love cybersecurity, AI infra. I love picks and shovels strategies. If there's so many AI companies out there, let's make whatever they need. I love robotics, humanoids, biosynthetic data, but probably I will change it next year. So my job is to find the next 10 years legendary founders. So I'm mostly interested in the good founders at the end of the day.
We invest in people. Yes.
I'll just say Greece is the place. Wasn't that in the movie? So
you already have three really interesting companies you invested in.
I've got 3 companies here. So, no, but in all seriousness, the mayor of Athens, I think, was a little surprised this event was happening in his opening remarks. I'm not at all surprised. If you look at the talent of the entrepreneurs, you look at the ecosystem, you look at how it's moving forward, it's standing room only in this place. So why should you be surprised?
Bullish on Greece. Okay.
I think just the unfathomable productivity gains we're going to see from vertically specialized agents once they're introduced into very old school industries in kind of areas that have been dominated by whatever, an SAP, a Coupa, whatever, for just generations by now, and how they're just going to change the shape of very kind of ossified old school industries and what that will do for all of our society.
Thank you so much, guys. Terrifying and exciting time to be alive. And thank you so much for listening. Efaristapoli.